In this video, I'm going to show you the results of the trades that I've posted for the past 2 or 3 weeks. And this is what the market looked like on the first day of the trades. This was January 28th. This was the release of the Federal Open Market Committee's last meeting. Not a press conference, but just a statement per se. And the market really tanked on that, and the rest is history. And since then, we've gone kind of up and down, mostly based on news from out of Greece, out of the Fed, out of the ECB, Bank of Japan, all that stuff. This was entirely a news-driven market. God only knows where it was going to go. No technical analysis can really be placed other than what I drew down here, which I had deemed the Yellen put at the time, right there, as it was a phrase that I came up with to say, okay, Janet Yellen, which is the Fed chair, will not let the market go beneath this level. And it really never did, and it kept bouncing. Eventually it'd go down a little bit and then back up, and on Friday we hit all-time highs. But this was the market that we were trading in. It was a choppy market. Even though things were moving, you didn't know which direction they were going to go, and it was really hard to come up with some sort of technical analysis. Now we're getting a little bit of stability with the VIX starting to come down to levels it hasn't seen in quite a while. And it was a difficult time to trade. And I put out in a couple of videos that if you can trade in this market, you can trade in any market. Because there was not a lot of stability and a lot of uncertainty going on. So with that, let's get into the results. So here's the spreadsheet we're going to put together for the trades of the past couple of weeks that we put on there. There's going to be a lot of numbers and data on here, but the most important columns for you to look at are percent return and total account size, because those are really the only two numbers. Once you get through the nitty-gritty details, those are really the things that really matter to you, is how much money you're making and how much money you have in your account. The first video we put up there was a break even, where we won on Priceline, lost on Netflix. And therefore, I'm not really going to put that on the spreadsheet, because if you had $1,000 in your account the previous day, you still have $1,000 today. And most of the time, I view break evens usually as wins, because I'm learning something that I didn't know the day before and didn't have to lose money to learn the lesson, which is incredibly valuable. And then other times I do something stupid, and therefore the break even is a loss, because you should have won, but you didn't win, and therefore you took the loss. So here are the dates of the trades that we placed, starting on January 30th and going through February 12th. We placed 11 trades on here, and I'm only placing the trades that I put on the video on the previous day, saying this is where I'm going to go. And therefore, here we're going to start. First one was on LinkedIn. We entered for $1.56. We sold for $3.50. Direction was up, and it was a win. 124%. I think I said 125 in the video, but roughly 124 or so if you really want to get accurate, which you're going to have to when you're doing your accounting. Now, for those of you who have never traded options before, when I say $1.56, I don't mean literally a $1 bill, 2 quarters, a nickel, and a penny. I'm talking about the price of each share of stock that you're controlling with the option is $1.56, and therefore you multiply that number by 100 for the amount of money in the account that you need in order to buy that option, because an option controls and gives you leverage over 100 shares worth of stock. So you multiply this number by 100, and that's the amount of money you need to enter the position. And when you sell it, you're not selling it for 3 $1 bills and 2 quarters. You're selling it for $350 for each position you enter. And the quandary we have now is, how many positions are you going to take? And that really depends on your account. And what I'm going to do is I'm going to put in a starting account value of $6,000 right here. And the reason I'm doing that is because when I first started, I didn't have a massive 401k that I could cash out, that I contributed for 30 years. I didn't have much to begin with, so scraped together And that's about what I had. And plus, this particular kind of trading isn't something where you can throw $25,000 at a position and expect to make that kind of return in a day, unless you have some sort of insider trading and inside information of some sort, which I definitely don't. I'm just one guy, one retail trader, calling it as I see it. And therefore, based on a $6,000 account, what I'm going to do is I'm going to put about $300 for a position. That's about 5% of the account. You want to have a rule on and set, okay, this is the amount of money I'm going to put in a position. And for me, if you can't put at least $300 on a position, you're really limiting yourself to a lot of the stocks that I like to trade, others like to trade. As the market moves higher and higher and higher and higher, some of these share prices are more than $300. So you can't even buy a share of Amazon right now. Therefore, about $300 is the max that I'm going to put on for these particular trades. And so therefore, we're going to put on 2 positions. We're going to buy 2 options. Another thing you have to look for when you're figuring out which position to take is what's the realistic ability of you getting filled. Because remember, whenever you're buying a futures contract, an option, a stock, something, when you place that buy order, somebody else has to sell it to you. And when there aren't that many traded throughout the day, it's hard to get filled. And on LinkedIn per se, there is no way in hell you're going to get filled for 10 positions. There's no way you're going to get filled for that many. And even if you did, you're pretty much owning the entire options market. And when you go to sell, somebody has to buy all those. And the likelihood of you getting in and out when you want to is very, very limited. So for LinkedIn, I usually don't trade more than 2 or 3, if that, depending on the day, depending on what the movement and the technical analysis that I see is going to be. And therefore, when we sell something for $350 that we bought for $156, the amount that we add is $388, and we add that to our starting account, and now we have $63.88 in the account after the first day of trading. The next day we had a Facebook trade. That particular one was an entry of 69 cents, an exit of 49 cents. That particular one was a loss of 29%. Based on our 63.88 account size, we're going to put about 5 positions on there, and therefore we're going to take a loss of $100, and our account now is back down to 62.88. And something else that I'm going to start doing at this point is keeping track of my winning percentage, so I can see one big number that's telling me how well I'm doing. So far we have 1 loss, 1 win, total of 2 trades, and when we calculate our win percent so far, is going to be the total number of wins divided by our total number of trades percent. Right now we have a 50% winning percentage. And don't get freaked out when you see 50%, as you can see, number one, our 1 win was significantly bigger than our 1 loss, but also we've only placed 2 trades, and it's very similar to when a professional baseball player on opening day goes 4 for 4 with 2 singles and 2 doubles. Their hit percentage is 100%, but no one in their right mind bats 100% throughout the entire season. I think even the record is some 40, 41, 42%, something like that. And therefore, it's going to be more accurate as you put more trades in. So don't freak out if you're keeping track in your first 2 trades. You're at a 50% winning percentage. Our next trade was on Amazon. We took a win here. We had 106% return, $2.50 for each position. So we're only going to take 1, even though it's a whole lot less than our $3.50 that we placed on the previous one. If we were to take 2, we would have to put $500 out of our account, and that's too high of a percentage. On this particular one, we won $265. Total account now is at $65.53. Our next one was on Tesla, and what we did here is we did something particularly tricky, and you'll see back in the video what we did is we had 1 entry for $1.99 and then another one for $1.22 right there. So our total entry on the position, on the 2 positions bought, was $3.21. We sold both of them for $2.12. So we take that, multiply it by 2, and we went down for the direction. We took a win, and our percent return was 32%. I'm going to call this 1, but in reality, you can see the video. There were 2 positions taken. You add them both up, it's $3.21. You take that, that's one of them. One second here. 103 bucks. Add it in. We're now at 66.56. Trade was on Amazon. This one we took a loss. We took a 40% loss. Put on 2 positions. Loss of 158 bucks. Down to 64.98. We update our win percentage. So far it's up to 60%. We're up a little bit in value so far. And let's get on to the next trade. The next one was on Apple, and once again we did something a little tricky. You'll watch the video again. We did a factor of 3 positions times 45 cents, $1.35, and what we did is we sold 2 of them for 75 cents. We sold another for 55 cents. We did in fact go down on that particular one. We took a win. The winning percentage is 52%. And this one, we put on 3 such positions. It is Apple, so we will be able to get filled. Took a win of 210. Now up to 6,700. And here's where things start to get a little different. And our next trade was on Alibaba. Enter for $1.09. Up for $1.70. Going up. Took a win of 56%. Now here's something where I want to take a note. Because you can see our account size is now $6,700 as opposed to $6,000 when we started. If we were to place this trade on January 30th, the same time we placed that LinkedIn trade, we would only be able to put on 3 positions. However, because our account size has grown, we can keep that percentage capped, but still put on more positions. So we can put on 4 positions for this particular one, and now we're up, and our win percentage is now in the 70s. Our next trade was on Netflix. We took a win right there. We had a percent increase of 111%. Even though our account size has grown, we don't have enough to put on 2 positions. That would take $620, and that's nearly 10% of our account. You don't want to do that, not at this point yet. So we took a win of 345 bucks. Now we're up to about $7,300. Now on the next particular day, we put on 2 trades as I was watching Netflix for the primary, but also had one on Amazon as well. So we took 2 right here, and I'm going to base both the account sizes on the 72.97 because at the beginning of the day when you're determining how many positions, you go with the morning, and you can't base a position based on, okay, I placed this one trade, now I'm in, because we placed both trades at the same time. And go back and watch the video if you're still confused. Here is the results right there. We ended up winning on both of them. We had a winning percentage of 49 on one, 151 on the other. 2 positions here, 1 position there. Still don't have enough high enough account to take 2 positions on Netflix yet. And we take that, and we're right there so far. Our winning percentage has climbed slightly. We're in the 80s at the moment. The final video had an Amazon trade where that was the result. Took a win, 97% return. Because we've done well on previous trades, we can now take 3 positions as opposed to 2 like we did at the very beginning. You can see right here that these 2 options were literally the exact same. 156 bucks per position in LinkedIn, 152 bucks per position on Amazon. But after you've had some wins under your belt and your account size has grown, that allows you to put on more positions. and therefore you can see the wins start snowballing a whole lot more at the end than they did at the beginning, because our account size has grown, and therefore the percentage increase is going to give you a bigger dollar amount. And so our final account value is about $8,400. Our final win percentage is about 82%. Now that winning percentage is a little bit higher than what I'm usually used to. And one of the things I did for practice before I actually put on these with real money is I went back and I back tested Netflix from January of 2013 to January of 2014, and this is in essence what it looked like, where I would pick a particular day, pick a direction I thought it would go, and then trade it throughout the day. And the greens are wins, the yellows are break-evens, the reds are losses, and the no trades are I never actually placed the trade. And my results for that particular one over about 240 trading days is I had about a 74% win percentage. And what I did with that is I would back test and go back to a day like this in the Netflix chart. And this is, let's see what the last day was, November 12th, 2013. And I basically said to myself, okay, if I absolutely positively had to put a position on Netflix today, what position would I take and what direction would I go? And I would draw the technical analysis as I thought it would look like, as a support channel of sorts right there. And I would think, okay, we're in a positive direction, we're still above the support channel, so we're going to go up today with a stop at about 331 right here. And if it goes below 331, then we're going to go down, because it crosses the support channel, and all we're looking to do is get our money back. And it opens, it goes down. So what I say is, okay, here's my up position. I don't know the price of anything, because you can't go back 4 years in advance without some advanced software to determine what the actual value would be. But I can see right here it starts going up, and right there was my stop. So right now I'm down in the trade, but what I'm going to do is, because I know it was a cross of the support channel, I'm going to wait on this and continue to go down and so forth, and just wait on it, just to get my money back, continue to trade forward, trade forward, trade forward. And at this point it's crossed the high back again, and therefore we're not going to make what we thought it would, and thus we were wrong and we took a loss on this particular day. So that's something that I would do, regardless of whether or not I thought the pattern looked good, regardless of whether I thought I could make money. That's what I ended up doing for my practice. And on that, over an entire year, I got about 74%, as you saw on the previous spreadsheet. So let's look back at our numbers and take a final toll. Excuse me. All right. So we started out with $6,000. We ended up with $8,404. We take our $8,404, divide it by 6,000, and we have about a 40% profit right there. And let's just subtract 1. 40% is our total return on our account over 10 days worth of trading. And so that's about 10 days worth of trades that I placed online. And you can go back and view any one of these videos. You can see that on the entry day of the day of the trade, the video is uploaded on the previous day. I'm not trying to cheat you guys or Monday morning quarterback anything of sorts. I explained why I placed the trade, I explained what direction we're going to go, and I explained my stop loss very, very clearly on those videos. And I put them in, and I traded them as I traded them throughout the day, with the losses that I took, the wins that I took, where I got out. You can see throughout here, in a choppy market, I had wins on ups and downs, and I had losses on ups and downs. I basically choose what direction is based on going on the chart. Nothing more, nothing less. And so let's put down here 10 days, 40%. Now in an average month, you're going to get between 20 and 23 trading days, depending on the particular month, depending on how many weekends fall. So if you go to August, there's no federal holidays, and if there's only 4 weekends in August, you're going to get 23 trading days. But if you go to a day or a month like December per se, there's Christmas, there's New Year's, there's half days in there as well. But if you extrapolate the same return you made in 10 days and you extrapolate it over a month, what we do now is we take the same win percentage. Let's see if I get this right. And you multiply that by this again, you're going to get about 11,771. You divide that by your original account, and you get 96% increase in your account. So that's how I get to doubling within the month. This is 20 days worth, and if you get the right particular month where you have more than 20 trading days, you get another day or two worth of trading, you're definitely going to double that account. So that's how I get to extrapolating that over the month, starting with an account of 6,000, ending with an account of 11,771, with a 96% increase in your account over 20 days. Extrapolate that over 21, 22, 23 days, you have a double of your account in 1 month. Now, if you wanted to do that from a practical point of view, you would have to trade a little bit differently, in the sense that instead of putting on 2 positions on LinkedIn, you would have to put on 4, and the likelihood of you doing that is very, very small. And therefore, you'd have to be a little bit more careful on what you placed. But Facebook, Tesla, Amazon, Alibaba, Apple, all those stocks are very, very liquid. Plenty of options being traded throughout the day. Plenty of opportunity for you to buy and sell a lot within the day. So this is not inconceivable by any stretch of the matter for you to double your account within the month. Before I let you go, here's something I really, really want to emphasize for those of you who are on the fence about trading, or maybe you've traded and you haven't done very well, or you really want to help get better at it. I want to go ahead and categorize what I view as all retail traders. I'm sure many of you, if you've traded for a while, you've seen something like this, the pyramid about where everybody falls in right here. And I'm going to draw 4 particular sections. I'll make it more like this. There's 1, and there's 2, and there's 3. Right here. So what we have right there is 90% of all retail traders. I'm not talking about the insiders at, say, JP Morgan or something like that have inside information. They're trading within the day, trading complex products or something like that. I'm talking about guys, everyday guys and girls, who are buying and selling stocks, options, futures, commodities, all that stuff. And so here's where I view everybody. 90% of all retail traders lose money in the market. Lose. In capital letters. And at first this was really surprising to me until I started figuring out why people are trading the way they trade. These are people who are absolutely clueless about the markets. They have no idea what's going on. All you need to trade is $100 in a broker account to go ahead and roll the dice if you want to in the markets if you have no idea what you're doing. And I hate when people do that, because they're throwing hard-earned money at bad. And if you really want to do that, just save your $100 and go to Vegas and put it on green. And for those of you who've never played roulette before, red is for one set of numbers, black is for the other, and green is for the 0. and 0 you get very, very limited opportunity of winning. There's only 1 0 on the entire roulette wheel, and that's why I say that, because you have a better chance of getting a 0 on the roulette wheel than coming out with a winning trade if you have no idea what you're doing. And imagine for a second that a doctor in an operating room didn't have to go to medical school, didn't have to do a residency, didn't have to go to college, didn't have to do anything about that. And the only way you could be a doctor is if you just walk in and grab some tools and operate on somebody. Healthcare would be a disaster, and it's pretty easy to understand why. These people just have absolutely no training whatsoever. They think they're going to win, and they're going to lose. Because the only people who win on every single trade are your brokers and the government. Your broker collects a commission on all of your trades, and that's one thing I didn't put on my spreadsheet, which are commissions. And the reason I don't do that is because I don't know who your broker is. I don't know what they charge for commissions. Some are $15, $20, $10, $5. Some are even free, and I don't know how the hell they do that, but it is what it is. And so that's something to keep in mind when you see the chart. But anyway, your broker is always going to make money, and the government's going to collect tax revenue on that money as well. So if you lose, you lose all your money. If you win, you got to pay taxes on your winnings, and therefore they always win. And so that, in my opinion, is why I don't think there's a quote-unquote certification for you to be able to trade, other than the fact that you want to open an account and trade wherever the heck you want. So if you've never had any training, if you are thinking about this and think, okay, I'll try it, I've tried a bunch of other things and they've all lost money, don't do it. So that's the bottom 90%. 5% right here break even. And the only difference between the bottom 90 and the 5 is training. Wrong direction. Training. These are people who study the markets. They maybe took a class on somebody who's successful in the markets. They are interested in the ebbs and flows of the ups and the downs, and people who actually put in an effort to try and learn about different trading strategies, different opportunities, where to put your money, where to trade. They're learning from either from somebody, or they've just lost so much from the bottom 90% that they end up going in, and now they've lost so much that those lessons would have been a whole lot cheaper had you spent the money to learn from somebody who had traded, instead of actually taking the loss and, quote unquote, as your parents used to say, learn the hard way. I don't want to see people do that. I want to see you get trained by good people who have results, who are authentic, who aren't trying to cheat you for your money, because it's your hard-earned money. You're the one who's trying to make an investment in yourself to grow your own bank account, grow personally, grow as an entrepreneur or an investor or a businessman of some sort, and therefore you want to find somebody who has what you want and then do what they do. It's the old adage in whatever business you're going in. It doesn't matter whether you're opening up a retail store, whether you're trying to start an internet marketing business, you want to open a factory, you want to sell clothing, something like that. You've got to learn from people who've been there, done that. And you can either learn the hard way by losing all of your money, or you can make the initial good investment to learn the systems and tools. So those are the 5%. They at least have put in additional effort and investment into their training, or they've just lost so much that they didn't give up from the 90% and they move up to the 5%. The next rung on here is, in my opinion, 3%. And those people win regularly. And the difference, in my opinion, between the 5 and the 3 are rules. And what do I mean by rules? They trade based on rules. They have entries they have exits, they have systems that they have back tested constantly. They understand that they're not going to win every single time. They've given the training, they've put in the time, they've put in the effort, they have their rules, they stick to their rules, they don't trade with emotion, and they end up winning more than they're not necessarily winning more trades than they lose, but they end up winning more money when they win. Because keep in mind, you can lose 2/3 of your trades and still make money if you win more on those winning trades than you did on your losing trades. And that's a hard concept for a lot of people to grasp, where if I put a buck on 3 different trades right there, but I lose 50 cents right there, 50 cents right there, but I win a buck. If I win $3 right here, now I've won $3 and lost $2. Now I'm up, instead of 1, 2, 3 that I have right there, now I have $5 afterwards. But I lost 2 of my trades, but in my 3rd trade, I've not only won all the money back, I won even more. So systems like that, you can win less than you lose and still wind out on top. And those are the people that have studied those systems, back tested them like crazy. Like I showed you I did with Netflix, back testing nearly a year's worth of day data, intraday data, learning about how the charts go up and down, creating my own rules based on that, because I had never seen or heard of anybody who had done that sort of thing. And so I created my own rules based entirely on time, price, volume, and volatility. And let me write that out for you real quick there. Time, price, volume, and volatility. And some people do trade with indicators. I'm not a big fan. And the reason for that is because every single indicator is comprised of one of these 4 things, or a combination of them: time, price, volume, volatility. Whether it's as simple as, say, a moving average, where a 10-day moving average, or you go even more advanced like a MACD. All of those are a combination of time, price, volume, and volatility. The only one that I very rarely look at was the DMI, and I only look at that for consolidations. And that's basically an amount of buying pressure and selling pressure, and the strength of the trend of the buyers and sellers. That's not a combination of these 4, and that's the only reason why I look at it. And all my trading videos, you'll notice they're all lines, they're all retracements about how much stock is pulled back before I think it's going to go up, or a resistance channel, a support channel of some sort. Those are my rules that I trade by. And before I look at a trade, I have a technical reason for why I'm getting in. Not a news reason, not a, well, I saw this on CNBC and and every single one of those analysts went up or think it's going up, so therefore I'm going to go up. That's not a rule, because those commentators on TV, they're not selling you financial advice, they're selling you propaganda. Because there's most of those people on TV, they're forbidden in their contracts to trade. So therefore they're not trading themselves. They may have done it in the past, but that doesn't mean they're doing it right now. So there's the difference between the 5% who break even and the 3% who win regularly. Now the final stop is the 1%. And the 1% are people who win, and win very, very large compared to the 90%. Because keep in mind, when these 1% are trading, more often than not, their entries are positions that the 90% are selling them. So therefore, all the profits are going to this 1% up top. And the difference, in my opinion, between the 3% who win regularly and the 1% who win a lot is one thing. And that is your mindset. And what do I mean by that? If someone in the 3% doesn't take a loss well, and they go pout about it, That's not something a 1% person does. They say, okay, what happens if this doesn't go my way? And you've seen most of my videos that I put on there, I put, what if I'm wrong? What if I'm wrong? What do I do? I don't freak out. I don't say, oh my God, my account just went down by 40 bucks. The sun's going to fall and the stars are going to align. No. You've got to stay in your trade. You got to have technical reasons for entry. You got to have technical reasons for exits. And when things don't go your way, you have to understand that you're not going to win them all. When you win, you've got to say, okay, here's what I did right. When you lose, here's what I did wrong, and this is why I did it wrong, and I'm never going to do it again. The other difference between the 1% and everybody else is that they don't get scared when they put their position on. It's something that has to be trained, and you have to understand that you're not necessarily in control once you put that position on. It's not like you're trying to build a car or something like that, and if a door doesn't go right, you can physically come in and fix the door to make it right and to put it on so it doesn't fall off. When you place a trade and it doesn't go your way, you don't have control over that. You don't have control over the entire market worth of stocks, indices, commodities, futures, all of that. You don't have control. All you have control of is whether you place the trade, when you place the trade, and when you get out of the trade. And be looking for opportunities to earn a profit on that trade. You're searching for those technical patterns, and when you see them, you understand how I get in, how I place that trade, how I get out, why I got out, and you have time stops, you have profit stops per se. One thing you'll notice on all my videos is that I don't have profit stops, and the reason for that is because I'm trading based on the technical chart of the day. I have my stops so I know when I get out, but I don't have my profit wins because I don't know where this thing's gonna stop, nor do I have a technical reason for it to stop. But if you're not, most of the time when I'm doing positions that are days, weeks, and months out in the future, I'm gonna have a reason for my time stop, a reason for my profit stop, a reason for getting out if it doesn't go my way, and making sure to get out alive if it doesn't go your way. That's what I've usually been doing in the trades on the day. So here's my diagram of all the traders, where they fall in, why they fall in where they are, and I know this because I've made a stop on every single level, and I know what it's like to do that. Now, I didn't spend a lot of time in the bottom 90 because when I first went to my training seminar for the very first time, I didn't even know what the Dow Jones was. There was a couple of people in the front of the room. I was by far the youngest guy in the room by at least 20 years. Had no idea what I was doing. Just saw a flyer in the mail that said, "Come to this training seminar and see if you like it." I came in, went to the next big class after the initial introduction, and heard a couple people talking about markets, talk about trading, talk about options, and it was very, very fascinating to me. So I got the training before I had ever even opened a broker account because I didn't even know what the Dow Jones was but in my first training seminar. And I went up after the first intermission and asked the guy what the Dow was, and he thought it was crazy. But he was actually very pleased because he knew that I hadn't gone the route that he did and learned the hard way. And so since that first training seminar, I got more training seminars. I got my practice in. I've kind of developed my own rules per se that have worked time and time again. And when something doesn't go my way, or I don't think something's going out the right way that I want it to, what I do is I go back and practice again and again and again until I get it right. If I don't get it right, I don't trade. So with that, you see the four quadrants of this pyramid. The only question to you is, where do you want to be? You can see the three things that it takes to get you from the 90 to the 5 to the 3 to the 1. You can see that very, very clearly. This isn't magic. There are people out there, they don't get lucky, although maybe some of them do, but the ones I don't, the ones that I know definitely don't get lucky. They develop patterns or see systems that work time and time and time and again. Wherever you think you are and you want to continue to grow and develop your skills as a trader, these are the 3 things that you got to go to. Training, rules, or training, rules, or mindset. One of those 3 things. That's going to get you where you want to go. And if you can't do those 3, then don't be a trader. Save your money and do something else. So there it is. Where do you want to be? And that's how you get there. And that's how I've gotten there. It's not easy. It hasn't been easy. It will never be easy. Nothing you do well is ever going to be easy. But if you push through it, if you learn the rules, you get the training, and you understand how to take wins and losses, and the biggest question you have to ask yourself if you want to get from that 3 to that 1 is this: what if I'm wrong? You ask that to yourself, you'd be shocked at how well your trading is going to get better. So with that, here's my contact information, the email, js7501511@gmail, and that's on my username as well. If you got any questions, just shoot me an email. I'll be happy to get back to you. So with that, I'm going to sign off, and good luck.